All right, we're about to get started here. Almost 12 o'clock. All right, it's 12 o'clock right now. Let's give it about 30 seconds. Let people come in. Keep monitoring my trades till then. All right, let's get it started. I'm going to try to manage some of my positions at the same time as I do the webinar today. 12 o'clock Tuesday. Quick disclosure here. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Positions. Got some longs, got some shorts, got the TZA on as a long, but it's really a bet short on the market. Came in and really added to my longs and covered shorts in a pretty decent way on Friday. I'll talk about that in a second when we go to the charts. So first, quick about me. So if you've been following this on a weekly basis, you probably already know my history. I've been with T3 really since 2010, T3 Trading Group specifically since 2011. I'm a professional trader, and I manage professional traders. I run T3's headquarter office at our Manhattan office when it's able to be open. Hasn't been open since last February. Hopefully it'll get open eventually. Currently working with a group well in excess of 50 traders. And then, part-time, or it was full-time at one point. I used to fight professionally, so I've been involved in martial arts my entire life. I had, 40 fights. I won 2 professional world titles in 2 weight classes before I retired from that sport a couple of years ago. What's been going on recently? So last week, I did not do a webinar. Last week was obviously crazy. Last week, I was on vacation. If you guys could see me right now, I'm doing air quotes because my vacation consisted of me basically working for half a day every day instead of a full day. The market price action last week, it was too much to miss. There was too much opportunity out there. So I traded the open every day on my quote-unquote vacation. I don't even know what a vacation is anymore. I've been trying to take advantage of this COVID situation as best as I can with my own personal life. I grew up in Long Island. I've been living in Manhattan, New York City since 2004. And I've been in the same apartment in the East Village since 2008. I love New York City. I really do. But right now, recently, it just hasn't been the city that I know and love. So I got out. I spent about 4 months upstate near Lake George, New York. Then my wife and I, we drove to Buffalo, Wyoming. We were there for about 3 months. It was fantastic, completely different experience. If you guys don't know where that is, take a quick second and Google search Buffalo, Wyoming. The next closest city is really like 70 miles away. So it was an incredible experience. We met some people there. I went to a rodeo for the first time. I jumped on a horse. I'd never been on a horse before in my life. Bareback. I got thrown twice. Still kind of recovering a little bit on my hip from that. So just all these really cool different experiences, trying to take advantage of COVID and trying to take advantage of the fact that, with trading, you can trade anywhere. All you need is decent internet. And that's what we're doing right now. So last week on my quote-unquote vacation, I spent the week basically in Yellowstone and the Grand Tetons. It was phenomenal. But, in an Airbnb, I got internet, I got my computer, and the price action last week I ended up trading every day. So I don't know how much of a vacation it actually was. And right now I'm speaking to you guys from Big Sky, Montana. So I'm going to be here for a couple weeks, then I'm going to Victor, Idaho for a couple of months, and I don't know when I'm going to be back in New York. Probably January is what it's looking like now. And honestly, I'm such a big skier that it would not be the end of the world if I was forced to stay out here in the western part of the United States through January and February. So anyway, that's kind of the update on my personal life, if anybody was interested. Like I said, just trying to take advantage of things as best as I can. So I'm going to be talking about markets, my favorite thing to talk about. I'm also going to be talking about T3 Trading Group. If you have questions about anything, feel free to reach out to me. Here's my email address. If you want to talk trading, reach out. If you want to talk about a prop account or a retail account with T3 Trading Group, reach out. If you want to talk about T3 Live and some of the T3 Live products, you can reach out to me and I can connect you with the right person at T3 Live if you want to be participating in my virtual trading floor room or what have you. So feel free to reach out to me. That's my email address. And let's go to the charts and see what's going on, because last week was so insane I could not take a real vacation. So here's our chart of the SPYs. Let's go back. Let's go back to what seems like forever ago, which is our coronavirus crash. The fastest bear market, I believe, in history, followed by the fastest recovery in history. This was an incredible down move. Personally, I did a really good job coming in and buying the absolute low on this day in a bunch of names: Apple, Microsoft, Alibaba. I thought I held them really well. Where did I exit Apple? Let me try to figure it out. Bought Apple on this day. It's split adjusted now, so it's a little bit tricky. I think I sold out of Apple. So split adjusted, I think I bought around $56. I sold out of Apple around $81 or so. I thought I did a fantastic job as Apple was approaching all-time highs. And then look what it did. Then look what it did, right? Making me look like I don't know what I'm doing at all. Incredible move these tech stocks have had. And the way market cycles work, look at how this rally in Apple, we could look at Tesla in the same way. Look at how the slope really started to increase over time. This is really important to learn and to pay attention to. This is called a parabolic move. The thing about parabolic moves in markets, they're brought about by momentum. They cannot last forever. There's no way that the rate of ascent can continue in this way. So the definition of momentum, which is one of my 3 important definitions that I base all of my trading around. The definition of momentum is the greater the price, the greater the demand. I love the definition of momentum. Back when I was in college, I went to New York University. I studied economics. And the reason why I love this definition of momentum is because it is a big fat middle finger to all of my economics professors. I learned in economics class that the way supply and demand works is as price goes up, less people want to buy. But the concept of momentum in trading, which creates these types of parabolic moves, is literally the opposite. What it means is the more expensive it becomes, the more people want to buy it, which kind of flies in the face of logic. But guess what? Human beings, which make up the stock market, yes, there's robots that make up the stock market also, but they're programmed by human beings. Human beings don't always do things logically, especially when it comes to money, right? I'm sure that anyone listening has personal life experiences where they have had to deal with someone in their personal life who was being completely irrational and it was based on money. That's what we see all the time. And that's why learning to understand the psychology behind markets and behind market movements is so important. I tell my professional traders that I work with, if I'm working with someone who's brand new, I tell them it takes probably somewhere between 6 months and a year to get through the learning curve of understanding the mechanics of how markets work. Once you get past that year point, the trading business really becomes 75% psychological. It's about understanding, first of all, your own psychology, how certain emotions such as fear and greed affect your decision-making process. And it's also about understanding the psychology of the market participants as a whole, because that's what leads to potentially irrational moves. And irrational moves are something that we as traders can learn to be able to take advantage of. So seeing Apple increase at this rate, seeing Tesla increase at this rate, I know that this is not sustainable. But the thing about momentum and the thing about emotion is that these movements can last for much longer than you might actually expect them to. So you really can't go short. I mean, you could have argued, there's so many places in this Tesla chart where you could have argued that it was ridiculous. Back here in February 2020, it was ridiculous. This move was parabolic. It was ridiculous. Again, it cannot last forever, and it didn't. It took a big pause here. It took a big time correction, price correction. Then obviously it got hit with coronavirus along with everything else. Same thing here, got super parabolic, had to come back down, time corrected, got parabolic again, and now this time is really price corrected, plus got hit with some interesting bad news about how, you know, they're not being added to the S&P 500. And you know what? When markets go parabolic like this, when they go up really fast like that, they can also go down really fast. And that is what finally happened. You know, we had been looking for this market to stall out at a certain point. And if anybody was watching those moves at the beginning of last week and the week before that, it was getting sick. The NASDAQ was up over 1% every day. Keep in mind, the average historical return for the S&P is about 7%. So when you see the indexes going up 1 to 2% a day, every day, it can't last. But again, it can last for much longer than you expect it to. I've traded for plenty of years over the course of my career, not plenty, but a few, where the market was up 30% on the year. 2013, where are you? Feels like yesterday to me, but I guess I've been trading for a while. 2013 was a 30% year. 2017 was a 30% year, approximately. So, you know, even though the average is 7%, there's a lot of deviance there. But you know, you're seeing the markets go up 1 to 2% a day. It's not possible. They have to come down. And that's finally what happened. Apple, NASDAQ in particular, S&P got so extended. The way that I measure extension is where price action is versus the 8 and 21 EMA. I consider very broadly on any time frame chart the space between the 8 and 21 EMA to be what I consider to be technical equilibrium for a stock or for a market. So when momentum comes in and it gets extended and moves away from that technical equilibrium, eventually a correction has to occur. And if you look at the NASDAQ trend since the bottom here, the coronavirus crash March bottom, this trend, every time it got a little bit extended, bam, it would pull back to that equilibrium area. Starts to go, makes a new high, bam, there's your new pivot low coming in that equilibrium area. Over and over again. And sometimes those pullbacks will just be to the 8 EMA, sometimes they'll be between the two moving averages, sometimes they'll be the 21, sometimes they'll even go through the 21 EMA, like we saw the last real sell-off that we had was in June, and then potentially bounce back. And then here we got so extended into this parabolic move. We probably got more extended away from the 8 EMA than any other point since March. And you know, you saw on no news, you'd see Apple going up 7% in a day. You'd see all these tech stocks going up 5 to 10% a day when there's no news hitting them at all whatsoever. That's just pure speculation driving the market. And you know, there's a lot of talk out there right now about what they're calling the NASDAQ whale and the SoftBank guy, Masa-san, you know, pumping the market with, you know, call buying and the quote-unquote Robinhood class of traders getting into options, implementing call buying, and then to add even additional leverage to that because Robinhood and all the other quote-unquote free brokers sell their orders out to HFTs who then front-run those orders. That's call buying on call buying, right? So if you've got a Robinhood person buying a call on an equity, there's an HFT firm who very likely is front-running that order and is also adding on a call purchase. So you really had all that speculation come in such a mad, an insane way. And then finally, we crashed hard on Thursday and Friday. And again, I'm supposed to be on vacation last week. How am I going on vacation when the market's moving like this? I'm not, right? I really started to kind of build into my short positions a little bit more in the beginning of last week. And then on Friday, I was trying really hard. I got to give myself some life separation. So I manage a VTF room, the pro desk room, and most of my professional traders are involved in there. So even though I was trading and I was still kind of available for pertinent emails on my quote-unquote vacation, I was really trying hard not to be involved in the VTF. But on Friday, I had to come in basically at about 9:40, 9:45, we could get that time stamped or time checked in the VTF room. I had to jump into the VTF room on Friday at about that time and let everybody know I was covering my shorts and starting to really buy longs. Most market corrections are 10 to 15%, maybe 20%. In this market correction, obviously NASDAQ got extremely extended. But from this high to this low, I think it was 12% in 2 days. It was time to come in and buy. And you can see it here on the small time frame. So this is what we call a king-queen reversal. If you look at a 15-minute chart, it's probably, oh, it's 15-minute chart, the same thing. I was expecting that to be a hammer. But basically, if people know what a hammer doji looks like, if you took these two candles and you just combined them together, you have a hammer. So basically what happened here was now the market on the small time frame, right? We have different time frames. Here on the big time frame, we were really extended to the upside on Wednesday at the close. Then here on the small time frame, on a 5 and 15 minute, at these lows, we were extended to the downside on the small time frames. So again, this is called a king-queen reversal. If you combine these two candlesticks, it's really like a hammer. And you see maximum volume here. That's ideal. That's what you want to see. Volume, we say, is confirmation. So when you have any type of technical pattern that you're looking at, whether it's a bull flag, a bear flag, or in this case, a capitulation buy setup through a hammer or through a king-queen. So basically they call it that because it's a red Maribozu followed by a green Maribozu on very high volume and an extended stock. And now this is after the NASDAQ now is down like 12% or so in like a day and a half. I had to jump into the VTF room even though I was trying to be on vacation and let everybody know, guys, I'm covering most of my shorts and I'm implementing some longs here. So I exited my lift short entirely. I exited my TZA position, which is really an IWM short, entirely. I covered most but not all of my Uber position. I bought Apple, I bought Baba, I bought Microsoft, I bought MU, I bought INSG, I bought Twitter, I bought RKT, I bought Lemonade in a pretty decently sized way. I was buying anything I could get my hands on. And then from that bounce, from that low, that volume confirmation, we got a very strong bounce. So into that up move, into the end of the day here, well, really what I did was I put a bunch of orders out and I went hiking. That's what I did on Friday, and I'm like in and out of service on this hiking up this mountain. We did I guess it was a 17-mile hike in the Grand Tetons to Lake Solitude. It was an amazing experience. So I covered a lot of my shorts. I added a lot of longs. I put a whole bunch of offers out, and I went hiking. And it was Friday, and then the weekend hit. And the market did exactly what it should in that case. It bounced back really hard. We were left with a very strong bottoming tail and very high volume in the NASDAQ. Same thing here with the SPYs. And I left offers out, so I covered a lot of my shorts. I was able to cover a lot of my risk. I re-entered my lift short very small. I re-entered my TZA position. And I added a little bit to my Uber position. Unfortunately, Lyft and Uber happen to be, and those are my shorts, happen to be like the strongest two stocks in the market today. And it was an awesome week because we finally got the movement that we were looking for. We had been looking for this to occur, honestly, for probably a month in the market. Looking for that upside capitulation to come in that leads to that big downside move. We knew that this move was unsustainable. It was just a matter of timing. So of course they're going to time it when I'm trying to be on vacation, and all the same, it still worked out to be really solid, and I was able to take advantage of it as much as possible. But now the question is, what happens now, and what happens going forward? Because it's tricky, right? So this pullback here in the market is more severe, but in some ways similar to that June pullback that we saw with the island top. If people have been following my Tuesday webinar religiously, we talked about this island top pattern here and how this was a Fed day. We were really able to take advantage of it in a huge fashion, this big down move. But then there's no follow through, which I honestly had expected a little bit more follow through than what came in. I remember this low here is 296. I really thought I could get a move down to somewhere between 292 to this gap fill area of 286, and I never got any further follow through than that. We just corrected through time for almost 2 months here, a month and a half, before we broke out and gave this next leg. And again, going back to what I was just talking about, understanding this concept of momentum. When markets have momentum, they need to correct, and there's two ways in which they can correct: time or price. So what happened was we went sideways. I was looking for an even further price correction, so we got a time correction. So now what happens here? What happens this time? So we pulled back to a decent level of support, this 335. And what I wanted to pay attention to for this morning for my team was Friday's low and the market's first 15 to 30 minute low. Because there's always a chance when we had a huge gap down this morning. Technically, it's a common gap. So really what you want to be doing into this gap, now this is my 5 minute, right? So this is Friday. This is today. So gap analysis, let me take a half step back. Gap analysis is a huge part of my trading. And I think that there's a huge advantage in understanding how gaps work in the marketplace. So when it comes to gaps, we have all these different types of gaps, all these different names: common gaps, breakaway gaps, continuation gaps, etc. But at the end of the day, what gaps really come to, what they really mean is you're trying to figure out, what does this gap do to the participants who are already in the marketplace? And there's two ways you could look at it. One way is, well, a lot of people probably came in and saw what I saw and maybe came in and bought on Friday. And now we're gapping down so big that those people could be trapped. And if they're trapped, they're going to have to sell. The flip side is, there's probably other people who missed this buy, saw this bounce, and go, oh, this is my chance to be able to come in and buy. So you have this kind of dynamic there. And again, technically this is a common gap. Common gaps tend to get filled. So common gap to the downside will tend to mean that there's going to be, more buyers coming in to take advantage of it than sellers. But we got to be careful with that in this particular instance, just because of the degree of price action that took place on Friday. So my initial thought process I was telling the team was, look for longs versus Friday's low into this gap down, and look for longs versus whatever our first downside pivot is. Because if we have trapped longs who are purchasing this rally, or who bought the close, people probably saw, oh wow, look at this tail, that's it, time to buy the dip in the market, BTFD, and they were buying into the close. Those people are trapped. And if they're trapped, they're selling off the open, and since the SPYs broke Friday's low, that's going to trigger a whole bunch of additional stops. That's what we saw there. So let all that kind of clear out before you come in and you take your longs. And that was really kind of the plan today. So a lot of what I sold into this bounce on Friday, I was rebuying pre-market and into the open this morning, really looking to trade versus that low. And then we got a nice little price correction back up of this gap down. I was also looking for a little bit more. I thought we could get back up to 339 today. Maybe we still will. Day isn't over yet. And, we'll see kind of how that plays out. But bigger picture, again, what can we expect going forward? It's hard to say. So first of all, now, we were just extended to the upside. Now we're extended to the downside, because here's where equilibrium is. So we have this common gap in a downside extended market. I still think it's better right now, actually, to err on the side of being shorter term long than shorter term short, believe it or not. I wouldn't be surprised if we corrected down further to 320 over time. But I think that big picture, I don't think that we're getting a March type sell-off. I also don't think that we're getting another July-August type grind up. And we have some seasonality effects coming into play as well. We got the election coming up in November, so September, October here. My biggest expectation is volatility, sideways volatility. I wouldn't be surprised if we broke down further and we came down to 320. I also wouldn't be surprised if this was more or less it and we worked our way back into this 345 equilibrium area and kind of bounced back and forth over the course of the next couple months between 330 and 350. That wouldn't surprise me at all either. So it's kind of very broadly what I'm looking for at this point. I got the pullback that we were kind of looking for, used it as an opportunity to really cover some shorts, enter in some longs. I still have some ammo if we pull back deeper to really be able to trade it or add to longs or reinitiate some shorts. But my biggest expectation going forward is just broadly sideways price action with a lot of volatility going into the election, and then we can make adjustments in time as the market provides us with more information. Someone here, what are those moving averages? So the blue here is my 8 EMA, the red here is my 21 EMA. These moving averages are extremely important to me. Again, moving averages are tools. They're not support and resistance lines. It's really important that people understand that. They're just squiggly lines. They're literally averages. But I use the 8 and 21 EMA again as a tool to tell me what I think is the area of broad price equilibrium. So again, when we've moved away from that equilibrium, when we're up here and the market's down here, when I got my SPYs, what's Wednesday's high? At 358.75, and the 8 EMA, which is my what I call upper band of equilibrium, is at 349.58. Basically, the SPYs are extended by $10 just off the upper band of equilibrium. That's significant. And now it's basically the opposite on the downside. So shorter term, I'd rather be long than short coming into today, especially in this gap down. We gapped down so big this morning. Could panic have come in? Sure. But I really don't think, after the market already corrected 10% and, now it's on the third trading session, that you really want to press shorts into a 2 to 4% gap down. You really want to come in and look for at least shorter term longs off that scenario. So kind of broadly what I was doing there. So that's the answer to that question. Vlad here, saying it could be potentially a bear flag on the Qs. I don't really fully agree with that. I guess it depends a little bit on your time frame, but the daily chart, a bear flag is a trend continuation pattern, and it's hard to really call this a downtrend yet at this point, especially if you're looking bigger picture and you see it's within the confines of such a huge uptrend. I mean, your last major pivot low in the Qs is back here on August 11th at 264.63. So I think as long as we're really above that, I wouldn't say that we are in a downtrend. But if we consolidate here, it could be a bearish consolidation. Maybe these moving averages cross, they work their way down, and that settles this oversold condition, and we potentially work our way lower. That could definitely happen, and that would probably be the playbook if we did have that deeper correction into this 320 area, the SPYs that I'm kind of talking about. So that's really some of the stuff that I'm kind of looking at there. And the couple of things I really want to emphasize to guys, even if you're and gals, even if you're day trading, you got to do everything from the big picture and work your way down, right? It always starts with the big picture. Even if you're just day trading, if you are trading on the side of what the big picture is telling you, you're going to have just a much higher probability of success in what you're doing. So that's why, when I run my morning meeting, when I run my afternoon meeting every day for my team, I always start big picture. The morning meeting starts big picture, first of all, big picture news, and then big picture technicals. What is the news? What's going on big picture? What are the big picture technicals? Are we extended on the daily chart? How aggressive should I be this morning? And then we break it down to the smaller picture. What is this gap telling me? Which individual equities am I going to focus on? Where do I feel I have an advantage? Do I have an advantage today? Sometimes there is no advantage. That's fine. Sit on your hands. Sometimes there's a huge amount of advantage. Do the opposite. Trade very actively. So we always start big picture to small picture, and I really think that's the key in a lot of ways to this business, because the individual correlation, or the correlation between individual equities and for the market as a whole, is just so high that if you're not paying attention, if you're not a student of the market, it's really hard to make money. As a matter of fact, one of the things I suggest to my traders, especially if they're newer, is handwrite out a daily synopsis of what the market did each day. Just because, again, understanding the market is so important to understanding how individual equities move. So if you write out a daily synopsis of the market today, we had a large common gap to the downside. about almost 2% in the SPYs, about 4% in the Qs. You could write everything I just spoke about. You could write that all down. We were paying attention to Friday's low. We're also paying attention to the first 15 to 30 minute pivot low in case some, stuck longs had to puke out their stock. That's what we wanted to be long against. Then we corrected back up. It was really a 15-minute correction to the 80 EMA on the 15. We pivoted there. We pulled back. We wanted to see if a higher low could come into the market. It didn't happen. It looked like we were just going to have sideways consolidation. Market started to wedge out on that 15-minute chart, and now we'll see what happens. Maybe it breaks out to the upside. Maybe it breaks down. It looks like in the last 15-minute bar just before, market tried to break up and failed. This is not a sexy looking candle if you are, looking to be long on this market right now. But maybe this wedge breaks up, maybe it breaks down, and you write out that daily synopsis of the market. It makes you a better student of the market, and it makes you a better trader. So maybe that could be my advice to everyone for the day on one thing that you could work on to improve on a day-to-day basis. And I totally agree with you, Vlad. This is a great market right now with the volume and the volatility coming in. I was not a fan of some of this July-August price action where we would gap up and go sideways and flatline all day. I like a market where I can trade actively throughout the day, and it's constantly providing me with opportunity. All right, cool. Let's hop back to our spreadsheet here. So that's kind of the market summary of the day. I just want to talk a little bit about T3 Trading Group. So T3 Trading Group is a FINRA registered broker-dealer. We primarily engage in professional proprietary trading. We also have retail trading accounts available as well. And again, if anybody has any interest in this, feel free to reach out to me and I'll provide you more information about it myself, or I'll set you up with a member of my team on how you can get started with us. We've been a professional proprietary trading firm for years. At this point, we're one of the largest in the United States. We have over 500 licensed professional accounts. We have 6 physical trading offices, which are all closed right now because of COVID. That'll come back eventually. I think there's chatter about the Manhattan office getting open again sometime in the new year, so we'll see how that plays out. That's where I typically trade out of. Again, I gave you guys my whole kind of story. There's a beautiful picture of my Brooklyn Bridge, my city. I actually used to live in this building right here some years back. Anyway, once the offices get open, you can trade in one of our offices. But even before COVID, probably 60 to 70% of our traders, something like that, were remote to begin with access to our virtual trading floor. So I'm running the morning meeting every day through the VTF at 9 a.m. Eastern, the afternoon meeting every day through 10 after 4. It shows all my positions in real time. I'm communicating to my traders in real time through there. What you need to know about getting started as a professional trader with us is that you have to be licensed. So there's 2 examinations that you would have to pass: the SIE exam, Security Industry Essentials, and the Series 57, which is the proprietary trading examination. T3 will sponsor you for the exams. We'll provide you with study materials as well. You'll also have to go through a background check in the initial process of getting started with the firm. That consists of a criminal check. You cannot be a felon and work with us. And it consists of a credit check as well. You cannot have declared bankruptcy in the last couple of years and work with us, as an example. So once the registration process is complete, you pass the exams, finally we can get into the good stuff, we can get into trading. For professional traders, we have 3 different software options right now: Lightspeed, Sterling Trader Pro, and WEX or Wolverine. Personally, I use Lightspeed. On the retail side of our business, we just have Sterling Trader Pro, which is an excellent software. Again, you can reach out to me on any of that. On the prop side, we have equities trading, we have equity options, we have futures, we have options on futures. So again, any of that interests you, reach out. I'll set you up with the right person to speak with. On the retail side, it's really just equities at this point, and equity options for portfolio margin accounts, and hopefully for all accounts very soon. What new traders should know. Basically what you should know if you're new is that one of the reasons I think T3 is a great place to start is because we're going to take care of you as best as we can. I'm going to take care of you, I should say, as best as I can. So all of my new traders get access to a 1-month training program. I used to do it by hand in the office, in our conference room every day. Since COVID hit, I've turned most of those classes into videos at this point. You'll have access to the virtual trading floor. The morning meeting I spoke about. The afternoon meeting we do is a review, but it's an educational review. I'm reviewing what the market did that day. What I'm trying to do very specifically is draw out lessons from what the market did that day so that all the traders can learn. And every single afternoon meeting ends with a Q&A. The T3 Live team, when I was first getting my VTF going, they were like, you should really have a day that's set up as your Q&A day in the afternoon where you can do Q&A. Well, guess what? I do Q&A every day, every afternoon meeting. If you're a brand new trader, ask anything. Don't be shy. If you're an experienced trader, ask anything. There is no question that is too beginner or too experienced after the afternoon meeting. I'm happy to answer anything. This is how we all learn. For experience, if someone is a new trader and asks a new trader question, and I have experienced people listening, it's always worth it to review those basics. And if you're a new trader and someone has an experienced question, it starts to plant the seeds of what you can be thinking about, bigger picture in your career. So we do require a capital contribution to back your trading risk. Typically, the way our business is conducted is you contribute a capital contribution, and what we're going to do on our end is we're going to start by providing you buying power at 20 times your contribution for equity day trading and 8 times your contribution for overnight positions. So someone who contributes $50,000 to the firm, we would start by allocating them $1 million to work with on a day-to-day basis, basically. And then you are compensated through a profit split. So you'll be keeping a percentage of your profits. And that percentage can vary a little bit, based on trader and experience level and things of that sort. So that's something that we can discuss individually. And then everything that I do, the education that I offer, the coaching that I offer, the mentorship that I offer, all that stuff, if you are a trader with the firm, I do it for free. My goal is to make traders successful. That's it. I have no interest in charging a professional trader with me an education fee. I want you to be successful because then you're going to be with us for a decade, like I've been with the firm for a decade. And you'll be making yourself money, hopefully. You'll be making the firm money, hopefully. And that's what we want. That's what we want. We want to breed success here. And again, experienced traders reach out. T3 is very well capitalized. We have some traders with us with very large accounts. So feel free to reach out. I'm yet to work with anyone who was too big for the firm. So test me. Show me what you got. So same thing. You want to come in with $1 million because you want access to $20 million. I can make that work. So again, reach out. There's my email address. Oh, and you get a bunch of other free stuff. Again, like I said, our goal is to breed success from our traders. So you get access to my VTF room for free. You get access to Scott Reller for free. Scott has been trading for decades. I have learned a lot from him over the course of my career. Phenomenal guy. You get his Reller All access. You get his VTF room. So, reach out to me. What are you waiting for? There's my email address. Get started on the team. We have a great group of people in the team. Everyone's really open-minded, communicating their trading ideas. Everyone helps everyone. There's nothing I love more than someone that I've brought into the firm and that I've trained who gets good enough that they can present ideas to the team that make me money in my own trading. I love that more than anything else. That's my goal, honestly. You never traded a stock before in your life. I want you to become good enough that you start presenting ideas that make me money with my own trading. And then it was worthwhile for me to put that work in. All right, guys. So I'm going to jump back to trading because this market has been awesome lately, and I don't want to miss any more time. So again, reach out to me, and you can get started with us. Have a great day, everybody.